And obviously after the 988s, if we ever do go there, there is kind of weak support, I'd say, at the halfway back at about 1,000. So between really the only levels of support that, oh, I'm sorry, not the 998s. So if we do end up breaking below the 11 figure, we'd have same anchor new high, which would put our support at the 1064 figure. My apologies, with invalidation at the like 1,000. So long as we remain below or above 1,000, the market could potentially be targeting 1515, which is not quite all-time highs, but you can only imagine that we would go to all-time highs if we came that close. This market would likely do so. We do seem to be rolling over on a lot of different levels, but the question that remains here now, and we'll know this very soon, is does this market, do the bears, will the bears give up here? Can they do it? Can we get a close below this, I mean, unbelievably important support level right here at the 1250 figure? Unbelievably important support. I mean, honestly, they can't do it. We got 1430 targets, and so yeah, and then we'd likely break out into a new series of extensions. Excuse me. So that's all I have for you today. The market is quite undecided yet, and particularly in the dollar, we look a little bit range bound right now, and the S&P 500 has yet to kind of break the major bull trend line in the sand here. We are holding, technically speaking. Maybe move this down to a hourly chart real quick. So maybe we could take a look at the series of measured move shorts that have taken us down into this long level. So from the 1373 highs, we held the halfway back short. We've traded down and we're kind of blowing through targets. We started trading and have been selling off in a series of extensions now that traded once to target, twice to target, 3 times, and now have a same anchor new low that actually traded and held today as a short at the 1276. That has a 1240 target and would likely continue and break down. You go from a traditional to extensions and then to straight down. So if we continue to break down next week, break the 200-day moving average, and break out of these shorts, in other words, just break down and go through targets, we have the potential for a flash crash, a June flash crash. Believe it or not, it would be a June-July flash crash. So it's oh my goodness, sorry. Interesting to note, we're actually holding below the 200-hour SMA still too, but this 1282 figure seems to be very important before we would potentially do an all the way halfway back daily short at the 1300 figure. And of course, if we have a failure at the 1300, the only other support I see is the 1313, or I'm sorry, resistance with invalidation at the 1330. So really, if this market does rally and we get above 1330, targets are a good 75 points, 70 points higher at the 1430s. I'm sorry, 100 points higher. Hello. So the market has room to go. It's got room to move, and right now is where the bulls are getting their resolve tested, and they need to prove to the whole market how much they want this. 15-minute chart to kind of give you the two levels. I think we're kind of stuck between here. Pretty interesting to note that today, most of our price action, once we went up and traded that short, we are holding now a halfway back long. So there's pretty good chance we see some consolidation in this 10-point range, basically 1260 to 1276, so 15-point range. Look for consolidation and a break of this range to tell you what this market wants to do, at least in the medium term. Alright everybody, well I hope you guys have a good weekend. I will be back with you on Sunday. As a reminder, I will be out of town next week will be kind of my last week. Oh no. We've got two more weeks before I'll be out of town, but oh, wanted to go over the New Zealand trade real quick. New Zealand trade. Alright. Let's go 20 years day. Apologize, I almost forgot about this. So we sold the Kiwi, 1 second. Sorry about that. Phone call. Alright, so from the 58 lows to highs, whoa, okay. Take you through the series of measure moves. Now, Kiwi's pretty technical. We've been over, some of the trends Kiwi's been in over the while. So this is a daily chart dating back to like 2009. Lows to highs, held their 50% retracement at the 6460s, traded up to the target. Lows to target highs, held the pullback at the 72 figure, did not break below there. Excellent. Traded up to 83 target. From there, from that target high now, we technically held extensions. That traded once, twice, whatever. Traded to target. So the fact that we had an extension target as well as a 50% target up to that level, that 83 figure, and we held that level, pretty important in my opinion. For that the previous daily, from lows to highs, this is where I'm getting our 77 target. Basically down to 77 figures, our 50% retracement. So there's a pretty good probability that if we break down from here, which we could, because we're holding a short setup, if we break down to here, we'll trade down to that next long target, which is where there is the possibility for some solid dollar strength before systemic dollar weakness into those all-time lows that we've been talking about. So we saw the Dixie could potentially rally, right? The euro dollar's got room to move in its range and do whatever it wants to do. And we see now with a cross like the Kiwi, well, there's the potential for downside. Now there's also the potential for substantial upside. From lows, however, to highs, the Kiwi did dip into its 50% retracement long. It didn't break it and invalidate it, which is why this trade is classified as a yellow trade, which I probably should have posted, but I think it's a pretty solid yellow trade. Now let's move down to yeah, we'll move down to the hourly chart. It's close enough. Get a good enough look at this. All right. So from the highs, we actually held a short setups. Held 50% retracement, just like the S&P 500 did. Traded down to target. Same anchor, or for the full 50% retracement, we traded right to it today. Now, I'm not saying that this. I mean, we held it, and we held it on first attempt. The invalidation is the 61.8, the 8180 figure for this trade, and our target is the negative 61.8 is down by that our target low. So we this trade I took a light position for two reasons. One, we're already long or short the dollar and long risk in some other crosses. This acts as a little bit of a hedge for those positions, and it was probably the best setup we could find. I mean, the euro is getting sloppy. The Kiwi, it's holding that level nicely, thus would likely have a better chance of working out for us. Either way, I see a high probability that this trade gets free. As the one reason being is from lows to highs, we traded to a target. There's a pretty good probability that we will trade, down to test the 80 figure, which is a good 50 pips below, and would be justification for putting our stops at break even on this trade. So this trade is kind of a hedge. It's a good setup now that we're below the 200-hour SMA, and there's a number of technical factors for why this level looks enticing. I mean, we're holding trend lines, we're holding a few channels and such. So anyway, that's the rationale behind this Kiwi trade. It is more of a hedge position for our other things, but it's a technical setup that has a nice target nevertheless. All right, everybody, have a great weekend, and like I said, I'll be back with you as